Hi there, and good afternoon, morning, evening, or whatever it is at the time you're watching this. This is going to be episode 3 of my unnamed real estate podcast, and this episode is going to be with Pat Diomede. We interviewed for about an hour or so. We covered the VA loan, we covered the organization that he's a member of, the Veterans Association of Real Estate Professionals, and I think it was a pretty good podcast. After this interview is over, we'll do the numbers wrap up at the end of the show. Thank you much. You are Pat Diomede. You are with Fairway Housing. You are probably the best person in the state of Arizona that I know for coming to with a VA loan issue. You've helped me on very many VA loans. You've even helped me on VA loans that you weren't actually personally involved in. All right. You were on the National Board of Directors for VA Rep with the Veterans Association of Real Estate Professionals. And that's pretty much all I know about you at this point. Although, I don't know if I ever told you this, you were my first lender on my first deal.
How cool is that?
Yeah, so it was Holly. And she was friends with your wife.
Right.
And you came into the deal through her. I was new. I did not know what I was doing. Running around, I used to call my broker every day with my stupid question of the day, And it's literally then after a couple weeks, it was like the stupid question of the day, and then after a couple months, it was stupid question of the week until finally I got to the point where I don't have to call them for everything anymore, and that was 10 years ago. But you were my very first transaction, and you've been my go-to guy for VA loans ever since. So outside that, you were in the Army. Tell me about who you are.
So, spent 20 years in the Army. Kind of interesting. I got an invitation to join the Army when I was dropped out of college. And I went home. My mother was crying. She had a letter in her hand from the War Department of the United States of America. And she said, "You can't go." And she was a little Italian woman, and she was crying. I said, "Where am I going, Ma?" And I ended up at the induction center and in the Army. Got in, liked it, spent 20 years. When I retired in 1991, it took a couple of years to find myself. It's kind of interesting that I was in a part of life that when I walked into a room, people stood up, and I became a civilian. I walked in a room and nobody cared. And that was right after the first Gulf War, right after it ended. After I found myself, I took an entry-level position at a bank. Didn't want to take an entry-level position, but I don't know, had to swallow my pride a little bit. Mm-hmm. And I've been in the mortgage business and as a mortgage banker ever since. I recently took a move to Fairway. I have found that in the last 10 years, giving back to the veteran community helps me sleep better at night. So I constantly look for companies that have a platform with service to veterans. And with Fairway, they have the Veteran Warrior Initiative. They also give away homes every year, and they really go out on a limb to help veterans succeed. Where people have told them no, we tell them yes.
Excellent. I just had that sudden panic attack that I didn't turn the speaker on. Or I didn't do anything.
Nice.
And the beautiful thing about doing all this on digital is that I can literally go in there and just go, all right, we'll just take that out like that never happened. So
Oh, cool.
I wish you could do that with my life some days. It's like,
Yeah.
my 20s, that never happened.
Well,
So,
there's a story there, I'm sure.
very many, and like all great stories, it starts with there was a girl, and I was dumb. So with you've transitioned over to Fairway. Tell me more about that veterans, the Warrior Initiative.
Well, I'm just kind of learning now about the Warrior Initiative, but we're nationwide. We're Fairway Independent is in all 50 states, and I want to tell you, the first I heard of it was maybe 10 years ago here in Arizona. Now they're Wisconsin-based, but I heard about that in Arizona here, and interestingly enough, their attraction was to help the American warrior, specifically the disabled warrior, but all veterans take them to the next level. And like VA rep, they're into educating the real estate community about the benefits of the VA loan. And the transition to that, interestingly enough, is only 12% of veterans use their VA home benefit. Part of it is because they're not educated about the VA loan. Part of it is the real estate community, their level of awareness and their experience with the VA, especially if their realtors have been in the business a long time, was not good. A VA loan used to be very, very expensive to the veteran, or actually not to the veteran, to the seller. And you had that brick and mortar building called the VA in the middle of the transaction. So you took a transaction that now takes 15 or 20 days, 30 on the outside, and it was 60 to 75 days. And the VA would look at every file. Now lenders like Fairway, we have the ability to underwrite the file. The only place that the VA enters into the transaction now is for the appraisal. And it is a centralized portal, which interestingly enough is exactly what conventional lending went to right after the crash in 2010, where now we have AMCs, appraisal management companies managing, and the VA has always had that. So VA can take up to 10 days for an appraisal, but can you close a VA loan in under 30 days? The answer to that question is yes. The other interesting thing about the VA loan is it's truly the only 100% financing out there. We could put a veteran in a house truly with no money out of pocket.
Okay, with no money out of pocket, that means including closing costs?
That includes closing costs.
How would an agent write the contract to make sure that happens? Because I've a couple transactions, couple times, people come in and say, I thought I didn't have to do anything out of closing costs, or I'd have to pay for my appraisal, I had to pay for my home inspection. Why am I writing a check? Right. And can you sort of discern out that it's like prepays? They don't know that prepays are coming down the line. That there's going to be, you got to pay prepaid interest and insurance, in some states taxes, and so. How would an agent who has a veteran buyer using a VA loan write that off or to offset the cost to them? Could you do it just with seller's assistance, or
with a little seller's assistance? And here's what I find. I find that in many cases, especially in this market that we're in right now, where inventory is low around the country, that sellers are reluctant to participate. But when you have everyone participate, you have the lender, the seller, and the buyer, basically the lender, the realtor, and the seller participate. You lessen the load, the responsibility for financial out-of-pocket on the veteran, and we put a veteran into the house. Think about this. The veteran, this is a benefit to a veteran who at some point in his life made a contract with America to maybe give it all and to die for his country. So the least we can do is give him a little assistance getting into a house.
I'm currently under contract with a VA loan, and I'm sorry I didn't get to direct them to you, because they came at me as a they've been working with another agent. They were unhappy with that agent. They were griping about it at work. One of my previous clients happened to be working right next to the person. It said, "Oh, you should call Ray." So I got the, lender, client off to the races. We're under contract, but it was a war. It was. We started out with our ace in the hole was he works nights, so we can be out there 10 o'clock, 11 o'clock Wednesday morning, seeing houses on Wednesday morning before everybody else is seeing them on Saturday. That worked really good up until one day we're out there, it's 11:30 on a Wednesday, and we're standing in line to see a house. It's like everybody else figured it out too at the same time. Wound up getting under contract with $25,000 over asking. $5,000 earnest money deposit. he had gone and checked his savings out and said, okay, I have this much. If it comes in low within a certain framework, we can negotiate off of that. So let's roll the bones and see what the appraisal is. And veterans can bring in their own money on the track.
Yes.
They can use that to offset even above appraisal.
Yes.
Right. So if that's what the contract is there a percentage amount on that?
No. So if the house appraises low, the veteran there's something called an amendatory clause, and the amendatory clause basically says that the earnest money is not at risk, so you can't really waive the appraisal. But a veteran is allowed, if he really wants the house, or in this market here, he can go over the appraised value of the house. VA will only guarantee up to the appraised value. So then the veteran is responsible for the rest.
Yeah. And just so you know how the story turned out, we got the appraisal at contract price, no conditions. Blew me away.
That's good.
I mean, I was like walked out. I mean, I was just walked around for like 5 minutes, going, "Oh my god, oh my god, oh my god!" And then they started calling everybody, and it was like that was just. But it was some advice is that if you've done enough VA loans and you know what the VA appraiser is going to look for, which is mostly health and safety issues, you have your inspection period because of the turnaround time on appraisals. You can usually get your inspection done, look up what you should be repaired. Call the agent on the other side up and say, here's the Benzer, we're asking for these repairs, and it's because we think these are going to pop up on the appraisal, so let's get them done now. Instead of a week and a half before closing when all of a sudden the appraisal comes in and there's a to-do list a mile and a half long.
Correct.
Yeah, and that's how this one worked out.
Well, one other thing about the appraisals, again, the real estate community is not always supportive of the VA loan, which is one of the reasons that VA rep got started. Well, what the community needs to know is that these appraisers are a reflection of the appraisal community at large. VA opened it up when they raised the price of the appraisal about 7 years ago. They opened it up to appraisers all over. So they hired appraisers so that their backload isn't out there. So for the most part, that appraiser is the same appraiser you're going to get for a conventional Fannie Mae, Freddie Mac, or an FHA loan. So all the adjustments, they're not going to make special adjustments or negative adjustments because it's a veteran loan. That's a fallacy, and it just is not true. So we need to dispel that. It's really important to get that message out.
All right, excellent. You've mentioned VA rep several times, and why you got involved. Tell me more about them as an organization. When did they get started? Do you know the backstory of?
I do.
Yeah,
I do. So VA Rep started in 2012, and the Phoenix chapter of VA Rep was the first chapter outside of California, and we chartered in 2013. VA Rep was founded to get the message out to the real estate community and to educate the real estate community about the benefits of a VA loan. Again, to dispel all the rumors. That's on the realtor side. On the veteran side, it's about fiscal literacy for veterans. We train a soldier, sailor, an airman, a Marine. We train them to fight for their country. And it's kind of interesting because I had this personal experience, and Ray, you might have had it too. They march you over to the credit union and tell you that you have to open an account, otherwise you won't get paid. But they don't teach you how to balance a checkbook. And now you've got 18, sometimes 17-year-olds, but 18 and 19-year-olds who never worked, and they're now wearing a uniform, don't know anything about balancing a checkbook, and they're getting paid, and the only reason they opened the account is because a drill instructor yelled at them and told them they had to do it. So there's the fiscal literacy factor is probably up a little bit today than it was 30 or 40 years ago. But the fact is that the basic fundamentals are the same in boot camp and basic training. They don't teach it. It's not a priority.
Yeah, but the economic impact to Jacksonville, Oceanside, those off-base communities, if you suddenly had every service person fiscally responsible. What about the used car dealerships out there who are trying to
amen.
sell you a 2005 Mustang, at 26% interest rate? Sign right here. Oh, don't worry, we already know your first sergeant's first name. You just put him down there. We know who to call if you don't make the payment.
Yeah. No,
And I'm sure you got those. You used to get those calls from off-base lenders or whatever. And
Yeah, I spent a little time as an Army first sergeant, so yes, I did. But the fact of the matter is, we need to build a foundation.
Right.
And if the foundation wasn't built, VA rep, we're HUD-approved counselors. We could do some assistance with pointing somebody in the direction on helping them get credit qualified for a VA loan.
Mm-hmm.
Fiscal literacy does lead to home ownership, but if you go backwards, it'll lead to foreclosure and home loss.
Mm-hmm.
So, and I shared this with you, even when we give a house away, we make sure that the veteran getting the home is going to be able to maintain the home and stay in it, and understands the value of home ownership. So we go through that process with the veteran before we give a home away. And by the way, we've given, I think it's up to 43 or 44 homes around the country, and 2 here in Arizona.
And you just gave away one this week, last week? I remember seeing that email.
Yes,
come across.
yeah, I think it was last Thursday, Friday. We gave away a home.
How were the veterans chosen for that program? Is it
they all have to have a story,
right?
and the Marine, the one story that I'm involved with was he basically hit bottom.
Mm-hmm.
He hit bottom. He was a Middle East veteran, post 9/11, not pre 9/11, and he was trying to get his life together. Was part of the Marine Corps League, and then he disappeared. And it was the head of the Marine Corps League who called us and said, "Help us find him." And we found him, and he was married with children, and everything was on the down low, if you understand what I mean. The marriage was down, but it was because of his experience in a war zone. It was PTSD, and which is pretty normal. We helped him. We pointed him in the direction. We got some assistance from the VA, and the VSO, the Marine Corps League, helped him get his VA disability, and we got a story, and we gave him a house that was turnkey, right here in the neighborhood on down not too far down the street from here.
Wow.
And interestingly enough, so the Chase and B of A are strong supporters, and Wells Fargo are very strong supporters of VA Rep. So the housing initiative, they will give us a house, and B of A has really been in the forefront. They give us a house. It's normally in a low to moderate income neighborhood. When we go in there and redo the house, the whole neighborhood gets cleaned up. The whole neighborhood does our landscaping, paints our houses. It cleans up the neighborhood. So this action that we do is not only beneficial to the veteran, but it's beneficial to the community, and it's kind of fun to watch. It really rips your heart out. It's really cool.
Gives you that warm fuzzy glow at the
Oh
end.
my God! It says, "Gee, I'm going to sleep well tonight."
Mm-hmm. Well, that's cool. So taking these individuals in their story and transitioning them out of that path, and I think we both have seen fellow friends, comrades wander off down that path, and next thing you know, you just get that call one night. It's like, hey, remember so and so? Yeah, he shuffled off his mortal coil the other night. So being able to, if anybody was watching this and it's like, I want to get involved in VA Rep, or I want to start getting into that process, and hey, I can't balance my checkbook, my ex-wife just left, or whatever, how do I get started? Where do they go?
So if we're here at a national level, they can go to varep.net, which
I'll
is
include that in the show notes, so it'll be at the bottom of the screen after.
okay. Cool.
So.
At the local, there is a chapter, Phoenix chapter of VA Rep, and you go to the VA.net site, you can hit your local affiliates and get a hold of anyone actually, or you can call me. I sit on a national board. I will point anyone in the right direction. If they're looking for help, again, I'm active in the veteran community. I was very blessed in my 20 years, and it's my way of giving back.
So are you sort of glad you got that letter from the War Department?
You know,
and the fact that you're calling it the War Department just really seriously dates you.
Yeah, yeah. Well, and it was the War Department. I tell anybody now, I've been retired a while, but it was the lottery system back then.
Right.
And I tell anybody it was the only lottery I really ever won. I was number 29, and I did 20 years. You know, 29 and 20. It's kind of interesting. I should play those numbers.
All right. You talked about foreclosure a little bit, and I wanted to bring up the concept. And we talked a little bit before we started recording and stuff like that, but I actually came up with a better example. And I'm sure he'll let me tell this story because it's my father. When my father's a Vietnam era veteran, he purchased a home in Billings, Montana using a VA loan. At that time, the killer interest rate of 6%. All right. This is back during Carter administration, you know, mid 70s or whatnot, where you'd see interest rates 14, 15, just hellacious numbers. So a 6% was a killer rate back then. Back then, I think they are still now, the VA loan was assumable.
Still is.
Yeah, and for people watching on this, you go, okay, what does assumable mean? Is that I could take the loan out, right? And when I'm ready to sell the house, if I got a really great interest rate or something like that, you would just step in and assume the loan, and the paperwork goes over into your name, and we come up with some way to get my equity out on the road. But it's basically the same loan passed off from point A to point B.
Correct.
I don't know if it's still currently at that time, but at that time, the person who assumed his loan wound up defaulting on the loan. All right. And because my dad was out of state, my dad was moved, he did not realize that that loan had been defaulted on, all right, until he applied for his VA loan on another house. And it's all of a sudden, it's like, hey, you got this foreclosure on here. And he's like, wait a minute, I don't have a foreclosure. Yeah.
Right.
And so, and to this day, he still thinks he can't use his VA loan on anything.
Oh, but he can.
I know he can. Dad, you're watching this. Listen to the man. He's smarter than me. Explain to my father why he can use his VA loan.
So, especially if you go back to the day when the prices were a little bit lower, the total entitlement today is based on 25% of the purchase price. So we have a basic entitlement of $36,000, and an expanded entitlement, which is it's 25% of $548,250. So that's what the guarantee is for VA. So VA guarantees the portion that would normally have private mortgage insurance and loan. But I digress. If you go back 30, 40 years ago, a home was under $100,000. So that entitlement was $36,000. Total entitlement for purchase price of $144,000. When you have a foreclosure in there, number one, when you let somebody assume your VA loan, they're assuming that portion of your benefit. So even though you're not on the hook for the mortgage part of it, okay, because VA, when they assume it, they transfer the mortgage part of it over to the new owner. The benefit part of it still belongs to the initial veteran. So your dad, in this case, lost his initial portion, his $36,000, as long as that house was, which I'm sure was less than $144,000. So now he's entitled to a balance up to entitlement of $548,250 less $144. And if he bought over that price, then he would have to pay 25% of the difference, unless he paid back the portion that he owed the VA. So essentially, right now, it would be safe to say that he would probably be able to buy a house at $400,000 using his VA entitlement.
Okay.
You know, so that's called expanded entitlement. the interesting is, let's go to a veteran today who doesn't have any derogatory on his VA certificate of eligibility because of the Blue Water Navy bill that went into effect January of 2020. There is no cap on the VA loan, which means that as long as somebody can credit qualify, they can buy a house at $2 million with no money out of pocket.
Okay, and that they just worked that into the Blue Water.
That was worked into the
Blue Water Navy. That was for Agent Orange impact on sailors who were deployed offshore, who was still getting Agent Orange because they're making the water on board the ship to drink and cook with and shower with, and they were, distillation process is still great, but it still wasn't clearing out to Agent Orange, and they started seeing impacts on the sailors after.
Correct.
Yeah.
And the VA, because they were never assigned to the Republic of Vietnam, wouldn't acknowledge that they were in Vietnam. And what the Blue Water Navy bill did was it backtracked that to an acknowledgement that, yes, this is because of the action in the Republic of Vietnam.
Okay. So
and along with that, they added, they took the cap off of VA loans. So you can always expand the VA loan before. And the best example I can give you is, let's say if the cap were $500,000 and you wanted to buy a house at $700,000, the difference between what the VA would guarantee is $200,000. But the veteran doesn't need to come up with $200,000. The veteran would have to come up with 25% of the difference, which in this case, 25% of 200 is 50. So the veteran could buy a jumbo loan at that point, do a jumbo financing with a little less than 10% down.
Right.
So Blue Water Navy bill just put a provision in there to raise the cap. So in the case of somebody without a foreclosure, there's no formula, magic formula, just buy it 100% financing.
That was a very quiet bill. That's one of those things I never heard anything about that until it passed. I mean, that was almost like stealthy ninja stuff that got that across. And it's are there any big bills out there that you're aware of? Anything coming up? That the veterans are really looking at getting passed, like trying to get support for. So are we waiting to see how the administration, how things play out?
Well, I kind of think, and I don't want to speak out of school, that the biggest news in the world today is a pandemic. So the legislative branch hasn't been doing a whole lot of legislating. I'm really not sure what's going on out there right now. We can't even go to DC at the moment, so haven't been able to go out there for a year.
Yeah, I was when I was researching for this show, I was like, I'm looking at, okay, who's new Secretary of Veterans Affairs? Oh, this guy. Never heard of him before. He's the Secretary of HUD. Oh, this lady. Never heard of her before. So it's going to take a little while, I think, for these people to make their impact on their services and get their people pointing in whatever direction they're looking for. And COVID is definitely number one for the VA right now. And we'll see how that plays out. Apparently inoculation, at least in the Salt Lake VA system, is doing very, very well. And the biggest impact and the biggest issue that the Veterans Hospital system seem to be having right now is they're calling veterans up and say, hey, get in here, we'll give you your shot. And they're like, I don't drive. So they're trying to work around that right now. And it sounds like they're, of all the government organizations, the VA hospital system seems to be doing best right now for getting shots in arms and taking care of veterans when it comes to COVID. Which, if I remember right, you got the cred yourself?
Pardon?
You got the cred yourself?
I did. Over the holidays, I spent it. I tested positive, and it laid me up a little bit. I didn't have to go to the hospital. Took six to 8 weeks to fully recover. The biggest symptom I had was, aside from the strep, which was the reason I went to the doctor to begin with, was tired. I lost all my energy, and it's not because I'm old.
I've heard people, tell me, it's like when they got it, it's like, and I'm like, do you remember mono?
Yes.
It sounded like everybody was, when it's like, okay, let's just go. You start feeling like you have mono, go get yourself tested, even if you're not anything else. That seems to be a precursor. And this is not medical advice, guys. I swear I'm going to get a big piece of paper with an asterisk on it. I'll just hold up and it says Ray is not anything besides a real estate agent, because I just spin off on stuff like that. But yeah, and that's something when I was doing my research and studies like that is, especially for transitioning, service people who are transitioning out into the civilian world, there does not seem to be a serious mechanism there. Now, we can't advise or help you getting down to the VA hospital and signing up for your benefits. Although, get down to the VA hospital and sign up for your benefits. If you just got discharged today, tomorrow you should be down there getting yourself set up. On the housing standpoint, I'm going to qualify for my VA. I got my certificate of eligibility, which you don't need to actually start the process, because you go to your lender and your lender, requests.
Oh yeah, I
it
can
for
pull
you.
them.
Yeah, you pull them. Right. I just did 20 years, hypothetically. I am out. It's time for me to buy. Here's my pension. Do I need to show income with a second job, or if my pension's enough to cover it? Do they have to defer that time period until they get settled in an area?
No, not at all. If you have enough revenue to support the debt that you're trying to incur,
Mm-hmm.
you don't have to have a job. And in many cases, and I'm going to backtrack on you just a little bit. Right now, what's going on is somebody transitions out, VA is part of the process.
Mm-hmm.
So they won't draw their VA disability right away, but they will be put in the system while they're on active duty.
Okay.
So their records transition, and many of them know that they're going to get rated at 50 or 60% before they're discharged. So, which I find kind of interesting, because that's new. That didn't happen when I was discharged.
Yeah, because you used to have to fight and scream and kick in.
Right. You'd have to take the time and go to the Veterans Administration.
And if you were in a part of the country that you did not have the VA hospital close at hand, you were like going down there for a couple days, because it'd be a day drive from Helena,
Right.
Montana down to, or St. George to wherever, and to show up, get your doctor's appointment, and then they would come back and say, oh, you're 10%. Or you're
Right. And then that part of your body that gets awarded a disability is owned by the VA. So back in the day, before civilian doctors were involved and things got contracted out, for anything that the VA was paying you for, you'd have to go to the VA to get that service. Got a bad knee, VA, not your doctor. Got a bad back, VA, not your doctor. And those health rules have recently been changed in the last 4 years.
Oh, that's good. That's excellent. Having a good conversation. I just wanted to go to my notes, make sure I'm not going to forget anything. Oh yeah, this is a really important one. A lot of service people get out and they have a girlfriend, a life partner, whatever it is, and they want to purchase a house using their VA, but they don't want to pop the question. Not insinuating anything, but for some reason, this is my partner. No, I have not proposed to her. She has not said yes. Maybe I have proposed to her. She has not said yes. But how do they work around that decision? You can't put her or the partner on the deed.
So you can't put them on the loan.
They can't be on the loan.
So,
Can they be on the deed?
So anything can happen post-closing.
Post-closing.
You can do whatever you want. However, up front. So VA will guarantee 100% financing for a veteran and a spouse.
Got it.
And a non-veteran spouse.
Mm-hmm.
If you're going to have somebody that you're going to cohabitate with, and you don't have a marriage certificate, then you have a veteran and a non-veteran. And then we're going to apply the formula that basically says, we're going to do math here for a second. Let's take $200,000. So the VA will take 50% of that $200,000 and guarantee 100% of that for the veteran. Then the non-veteran has to pay their portion of what VA would guarantee.
Yeah.
So in this case, it would be 25% of 100,000,
Okay.
and that's the only way around that if they're not married.
Mm-hmm.
Now, can two veterans that are not married buy a house? Yes. Both be guaranteed at 100%? Yes. That's so both are veterans. They can both use their entitlement. Don't have to be married, and they wouldn't use all of their entitlement. They'd only use the portion that they need, of 50% of the value,
Okay.
for example.
So it is possible to happen. What's my other question? Does the current VA loan program apply to reservists and National Guardsmen, or does it have to happen with the deployment?
No.
Yeah.
So if we take a reservist or National Guardsman who's never been deployed,
Mm-hmm.
they have to do their initial active duty for training. They're 2 weeks every summer. They have to do it for 6 years, and they have to have the points to qualify for a VA loan.
Okay.
Unfortunately, because of what's going on in the world, most National Guard reserve units around the country
I was about to say, do you know a unit that hasn't been deployed?
have been deployed, and the minute they become deployed,
Mm-hmm.
I believe they're entitled. Well, I know they're entitled, but I believe that the entitlement then comes under Title 10.
I remember when we got activated for Desert Storm, they were really interested in getting us all turned loose before the 180 days was up. Because back then, that was
Yeah.
at 181 days, all of a sudden you were a real person and you got the whole package.
Yeah, and now it's the VA. If you go to benefits.va.gov,
Mm-hmm.
there's a chart there that highlights what the different qualifications are
Mhm.
at different levels, and I think it's 90 days now.
Okay. So, all right. What else I wanted to cover here? I want to talk about refinance. All right. Refinancing into a VA loan. For whatever reason, maybe they didn't realize you have a veteran out there who purchased with a conventional FHA, conventional loan, whatever. Is there any benefits to refinancing into a VA?
I would like to say, if somebody really needed to go to 100% financing, VA does 100% financing, where you can't do that with, even on a refinance.
Mm-hmm.
So that would be the only case that I would say that it would make sense to go to a VA loan.
Mm-hmm.
There are funding fees involved with VA loan, which covers basically the funding fee covers what would normally be on a conventional loan, private mortgage insurance.
Mm-hmm.
The funding fee to 100% financing for a veteran that's not disabled is 3.6%.
Mm-hmm.
So if you convert that to dollars, it's a little steep.
Mm-hmm.
But VA home loan rates are a little bit better than conventional home rates, and sometimes you just have to do the math, because if the need is there, it's going to still be pretty cheap money.
Right. So.
And if somebody's disabled, then it's a no-brainer, because if they don't have to pay the funding fee and they want to do a cash-out refi or any type of refinance, their rate is going to be better, and there's no funding fee if they're on any type of disability.
Right. Cash out refi is where they're taking money out.
Correct.
So,
Correct.
and I don't know if they're going to waive this, and I don't know if they ever have, but after 2008 and whatnot, an FHA loan has the mortgage insurance on it for the life of the loan, no matter what your equity point was. I think they backed that off. I hope they backed that off.
No, they
or
didn't.
Are they still doing that?
They're still doing that if you do a minimal down payment.
Mm-hmm.
And there's some cases that we have to do, because of circumstances, have to do an FHA loan, where the FHA borrower will put 10% down.
Mm-hmm.
Then they go back to, I'm pretty sure they go back to the old rule, 5 years or 22% equity position in the property, whichever is longer.
Mm-hmm.
So it's going to be 5 years.
Okay. Well, I'll tell you what, anybody who bought 2 years ago in this market right now probably has their 22%.
Oh, isn't that a true statement?
Yeah, it's I was actually looking at just last year and year over year, and it's one of those things when they track appreciation. They don't do it by calendar year; they do year over year. So it's like in December, I was saying, "Wow, we went up 17%." Now I'm saying we went up 22%, and we haven't even hit that real fall surge yet, of where that's the bulk of the numbers coming in. It is just truly, truly amazing out there. What's the interest rates looking at right now?
Interest rates are driven by
Big asterisk. It's very
are driven by credit score.
Yeah.
So there's my disclaimer. But for a veteran, they're on a purchase, they're in the low twos.
Mm-hmm.
Actually, on refinance, they're again, depending on credit score, they're in the low twos, and conventional lending are in the high twos.
Okay.
So there is a benefit to using your VA loan.
Mm-hmm.
And again, I stress the VA loan is not harder to do than a conventional loan, and the appraisal is not a tougher appraisal than a conventional appraisal. If you're going to get the same appraiser goes out there and he's a conventional or VA, he's going to come up with the same value, because the stats are all going to be the same, and all the adjustments are the same. The rules for the appraiser don't change because it's VA, other than health, safety, and security.
Health, safety, and security. So that's excellent. Thinking of VA appraisals, and just I'm on a lot of Facebook boards, various real estate agents, and the stigma. I will say, because the gentleman I was just working with, all right, he was starting to get the feeling that walking around making an offer with the VA loan checkbox checked was starting to hurt us. All right. And he was asking me, is this hurting me as a buyer? And I could not in good faith tell him, no, I don't think it is. Because I don't know the mindset and the education level of the agent on the other side, the seller's agent. I don't know the mindset and the education of the seller on the other side, and whether or not they're thinking this is an old 1980s VA loan, where they're going to come in and,
No, I agree with you.
Yeah.
And the education, again, going down to part of VA Rep's mission is to educate the real estate community, specifically the realtors, and some lenders, okay, that the VA loan is not the bull in the china shop, and that it's actually more forgiving than most other loans, as far as credit forgiving, income forgiving. The VA loan, we say we have a ratio on a VA loan, a debt ratio, but the reality is the VA loan has always had something called residual income. So the ratio doesn't really make too much of a difference. They just want to make sure that you have enough money left when you close on this loan to live, so that you're not house poor. And does that mean that if your debt load is over 41%, you won't do that? No. They factor in how many members of your family. So if you have a large family, that residual income is more. But if it's a husband and a wife, that residual is left because they don't need as much. So during the foreclosure crisis of 2008, 9, and 10, the VA loan had the lowest foreclosure rate because of their underwriting standards, which they never wavered from. They didn't do any of the, ninja, no doc, stated income, no ratio. They didn't do that. They always did loan, put it together, income qualify, make sure you have the residual income at the end. And that foreclosure rate stayed very, very low.
And there's no age limit.
There's no age limit.
There's no age, because we just, it was actually not last December, the December before. Wow, last year went really, really quick, but Gary, who I was talking to yesterday, he was over 70,
Yep.
and he was pure pension, and you got him qualified for, I think, we were right around 250 at the time. Got him
Yep.
in a place at 250, and he's easily in his 70s.
Yep.
And he qualified by himself on that.
And he qualified alone. And it's that's a story. But we have to support fair housing.
Right.
And according to the Equal Credit Opportunity Act and the Fair Housing Act, we cannot discriminate based on age.
Mm-hmm.
And the best one I've got is I have a veteran, World War II vet, and when he was 92, he came in to see me, wanted to know if he could qualify for a VA loan. I said, well, as long as you're a veteran. He said he served in World War II and showed me his 214. I pulled his certificate of eligibility, and he said, I have to go home and think about it. I said, well, you're 92, don't go home and think about it too long. And he came back about 9 months later, and he was already 93, and we closed on a VA loan, a 30-year fixed rate VA loan.
Outstanding. So, you keep in touch with him?
He passed a couple years after he bought the house.
So,
Actually, I was trying to do honor flight for him, and I had it almost all approved and ready to go. I was going to be a sponsor, and he got sick.
Oh, that's in Gary's case, he wanted to have something to leave to his family, and his brother was a real estate agent once upon a time, and just said, the equity that you will gain in your house, finishing your years in that house, will be something nice to leave behind. And I think that was his primary motivation for purchasing and whatnot. And he's seems a lot happier in there than he was at the retirement home he was in before. And
Well, it's cheaper.
it's cheaper. My last week's episode, my previous interview was with a gentleman who does reverse mortgages and whatnot, and the very cost difference of if you can age in place and have home nursing come and visit you, as opposed to going on site, and there's a huge quality of life difference there. And a lot of people just prefer that. By having your own place, having your own walls.
Amen.
It's like,
Amen.
I'm going to hang this right there at 3 o'clock in the morning with a hammer, and nobody's going to complain because that wall's mine. But I think I got most of the notes I wanted to cover on this. So if a real estate professional, they don't have to be a veteran to join VA Rep, correct?
That is correct.
All right.
We have.
You might not get all the jokes.
No. But we have veterans
Mm-hmm.
that are members of VA Rep, that are industry professionals, and we have non-veterans, and quite candidly, we call them patriots.
Okay.
We figure if they're joining a veteran organization, and part of it is to give back, and the end result is anybody who joins is going to get some additional education that they wouldn't get about home ownership for veterans and advocacy for veterans, and that's what we're all about.
All right. I printed up the 2020 policy statement from VA Rep, and there was something I wanted to ask about. They do a new policy position every year, and they were talking about there's something in here, a 2013 study, homelessness and money management in Iraq and Afghanistan veterans, that says 30% reported money mismanagement, all right, was associated with the homelessness, right? And that's going back to the conversation we were having earlier. Is that you take an 18-year-old, you hand them a check, and they never figure out how to balance that. And when they get out, bam, you're just on the street. I mean, it's just, there was if a veteran is sitting there watching this, and let's say he's having issues like I'm running out of money by Wednesday. I'm paid on Friday. I'm out of money by the next Wednesday, and I'm eating ramen. How does he get in contact with somebody who can help him out with that?
Find us. Find somebody from VA Rep. VA Rep. And one of the other things that I personally do, VA Rep, we'll get them to our home counseling center. We we can't take them off the street because that's not part of our mission. Home, that's an entirely different position. But interestingly enough, I had a homeless fellow that was referred to me, and he had income of $6,000 a month. There was no reason for him to be homeless. He just needed a little help from the VA, and we got him back over into the VA system.
Mm-hmm.
So we can't be too judgmental about those that are homeless, because some of them are homeless because they just need direction.
Mm-hmm.
It's not because they don't have the means, the financial means.
Mm-hmm.
And sometimes the financial means is available. We just need to get them over
Mm-hmm.
to the right channel to get them that financial means.
Mm-hmm.
The state of Arizona has a good veteran initiative for pre-911 and post-911 veterans.
Mm-hmm.
The only proviso is you have to be an Arizona resident originally when you went in to serve your country, or have served in one of the unit, the National Guard of Arizona, to take advantage. But some of the initiatives will give up to $20,000 per vet. They won't give the $20,000 to the vet, but if they got in trouble because of anything related to their disability caused by them being a veteran,
Mm-hmm.
they can get help.
Okay.
And I sit on a board for pre-911. This is pre and post, and we've helped. We can help vets. We
Sounds
can help
good.
vets.
Now, this is a little bit in the weeds on the VA rep stuff, but lack of veteran inclusion in the CFPB interpretation of the Home Mortgage Disclosure Act. That's something that you guys are currently working on and is trying to get turned around.
Well,
And explain what that is.
So
This is going to be a big. I really think the CFPB, is going to be a really big topic coming up in the next 6 to 9 months. So lenders are starting to lean, going, okay, they're back.
Well, and they are.
Mm-hmm.
And again, CFPB has a purpose, because the biggest part of a mortgage transaction prior to 2010 didn't have any oversight,
Mm-hmm.
none. And now the CFPB provides oversight to the mortgage industry. So nowhere, the original IRLA, which is a Uniform Residential Loan Application, was created in 1944 and had never been changed. They added HMDA to it, which is information about demographic background, to make sure that we're practicing, that we're lending to everybody and applying the same rules. Nowhere on that application did it ask if you ever served your country. The new application coming out, we heard next month, asks, did you serve? Where did you serve? So now when you do an FHA mortgage, there is a comparison between conventional and FHA. Our ultimate goal is, if somebody indicates on the mortgage application that they're a veteran, that a side-by-side comparison comes up and says, here's your VA benefit, did you know it? And this is the difference between a conventional loan and a VA loan. So where they put that in the application has been something that we're dealing with. Mm-hmm. Is it above the line where the applicant signs, or below the line where the applicant signs, or below where the loan officer signs when he's asking the HMDA questions? Mm-hmm. So I believe it's going to be below the applicant. The one I saw was below the applicant's signature, but above HMDA. So the applicant is responsible for answering HMDA questions, and now the application is digital before he can proceed, or he could choose not to. And it's going to be the same with the VA questions. Okay. Did you serve? But it's going to be, did you serve? What did you serve? What branch of service? Did you serve active or reserves?
Yeah.
So that's coming.
Yeah. Because the other thing they call out here is, and I got a fair housing class I'm having online here in a couple hours, so this is a really topical for me, is that veterans are not out of the fair housing opportunity as a protected class on that side. And that's something that's being pushed forward is...
Well, when less than 3% of the nation's population is veterans, you would think that the veteran would be a protected class.
Right. So that's something you guys are lobbying for, and
we talk about it. It's on the horizon.
Mm-hmm. Well, the hard part's getting in and talking to the congressperson.
Well,
and it said, "Hey," So, but yeah, that's that actually came up in my last fair housing class I took 2 years ago because you take these classes every 2 years, and there was one lady in there who said, "No, veterans are," and it's like, "No, we're not," and it was a mixed reactions from the veterans in the place. It's like some were saying, "Yeah, we're okay with that, get us on there," and the other half says, "No, we don't need your help." But looking at it more and more, it's like this is something that's going to need to get addressed because you are seeing, you know, the if nothing else, just to get over the pushback of, oh my God, it's a VA loan. I'm not going to take that strictly because it's a VA loan and I don't like veterans. All right, and this is where I start working a little blue in the conversation. Is like, yeah, you don't like veterans. Sorry to hear about your girlfriend. She ran off with somebody.
Yeah.
So, but all right. So that's your guys' goals for this year, and how. At this point of the conversation, I'm pretty much out of questions. So I always ask: is there a question you've been expecting me to ask you that I haven't asked you yet, or any information that you'd like to volunteer that hasn't come up in the conversation?
No, well, not really, but I will add this. For those listening, that if you've not used your VA home loan, don't be convinced not to, because it is absolutely the best loan. It is the only 100% financing program out there. And it's something that you earned. If you're a veteran, you earned that. It's not because you don't have the means. I will share this with the audience at large, especially my realtor partners. The stereotype is that somebody doing 100% financing doesn't have any money, and that's just not true. The other part of that is that they have poor credit, and that's just not true. The average veteran around the country has a credit score of 727, and the average veteran around the country has $28,000 in the bank. I find that very interesting because they look at a pre-qualification letter, and the first question is, they want to do 100% financing, there must be something wrong. They don't have any money. And that's a stereotype. Oh, and now they want to go VA, so now we have the VA in the middle. The VA is not in the middle of the transaction. The lender is the control. So please, when you're looking at pre-qualification letters and it's a veteran, keep in mind that veteran served his country. He earned that benefit, and it's not that he doesn't have any money to put down. It's that he doesn't have to put any money down.
Sounds great. Thank you very much for your time.
Oh, my pleasure.
Thanks for coming in, and I'm going to leave your contact information and everything in the show notes so people can get a hold of you. I'll leave the link to VA Rep on that also. And like I said, thank you very much for coming in.
Oh, my pleasure, Ray.
Have a great day. And once again, I'd like to thank Pat Diomede for coming down to my office and shooting that video with me. This is my second interview, and I got to use an entirely new set of cameras and recording devices, and you tell the audio is a little bit off on that, but I'm learning important lessons, so hopefully the next one's going to be better. Once again, that organization is a Veterans Associations of Real Estate Professionals. If you are a real estate professional, either on the lending side or on the realtor side, I would definitely encourage you to take a look at this organization. They are doing really, really good work on helping veterans get into their homes. And now for the numbers. I'm running the numbers on Wednesday, February the 17th. Our active listings was 4,297 total listings in the MLS. That is a change of a negative 249 properties from the week before, continuing our downward trend since about mid-October. New listings came on. There was 2,252 of them, and there were other things. There was 2,013 of them were closed in the, last week. Pendings was 2010, so 2010 there. Under contract, looking for backup offers were 1,305. Offers with a buyer's contingency was 81, and 606 properties came back on the market. So we're still seeing a tightening of actual product out there for people to put bids on. So if you are interested in getting into the game, this is an interesting time to get in, but it's definitely a time to get in. And you can read into that whatever you want to. The news out on the street right now is that we're not going to see anything change in this direction or these numbers anytime soon. Builders are building as fast as they can, but we still have incredibly low interest rates. And because of those low interest rates, people are able to actually purchase these houses, even at what historically looks like inflated rates. With rentals being so high, many people are just looking at the numbers and going, why am I paying a landlord's mortgage when I could be paying my own? Once again, if you think you're interested in buying, contact your lender, contact your favorite real estate agent. If you don't have one, I like to think I'm charming enough. I might be your new favorite real estate agent. But definitely contact us or the lender and see what we can do about getting you on the path of home ownership. Now, if you're looking to sell or you're sitting on a property and you're trying to time a market, the timing in a market's a fun thing. You never know what's going to happen next week. And selling a house is not something you just decide to put on Craigslist like you might put your old car on the market this weekend. Definitely get in contact with your real estate agent first. Discuss your timeline, when you need to get out, if you need to get out, and what your situation is. All right. Once again, if you have any questions, you can leave them in the comments below or email me. And thank you very much for paying attention, and I hope you subscribe and like this video.